Good afternoon, my name's Carol Harmer from the International Trading Institute. I'm going to run through the S&P, the Dow and the Nasdaq with you very briefly, obviously show you what we're looking at as professional traders, and hopefully you will gain some experience in this and be able to do this for yourself one day. Now, our aim at ITI is to bring you up to speed with the professional traders. That's who you're up against. It's not the banks or anything like that. You're not going to be up against spot desks. You're not going to be up against proprietary trading desks at banks. You're going to be up against algorithms, and you're going to be up against professional traders. Now they're looking at what you're looking at. It's just that they have direct market access, and they can do obviously bigger size. But if you can learn how to sit back and trade a market, it will be like the old saying, you know, buy a man a fish and you've got him a meal. Teach a man how to fish, he can keep doing it for himself forevermore. And that's our aim at ITI. You know, we are dedicated, I think, to making you the best that you can be. And we're going to do that for you. We're going to give you lots of pointers. We're going to give you lots of education, and I'm going to show you how to trade. You don't have to follow my trades, but you have an understanding of the way a professional trader will trade. So let's take a look at the S&P. Very interesting at the moment. As you can see, we've come down. Now, I use these pivot points. I went on about them this morning. Let me just bring them over here. All you do is you just enter the high, open, low, close, and it brings you up this formula. And this formula is what it does is it gives you levels that you wouldn't necessarily be looking for in uncharted territory. So it's brilliant for gold at the moment, because obviously that's where the market is going for these mathematical calculated levels. But, you know, I've used Fibonacci on here, but as you can see, I haven't taken the Fibonacci line from the high. I've taken it from where I think the move down started, which is here, okay, in February. So I've done that, and you can see that on the bounce back, we have not as yet been able to break through the 50% fib. If you look at our stochastics, they are at neutral levels. So these neutral levels, which means the market can go sideways and bring it back to slightly oversold conditions, which may give the market enough impetus on the top side to be able to break up higher through that 50% level of 5470. But also our daily pivot today is at 5516. There you have it. I've done it for you. Okay, so there are the levels that the market will aim for. It's a very simplistic way of trading. People make too much of it, and it isn't very hard when you strip everything away and you use indicators that you know are tried and tested over the years that you've been trading. Okay, when you think of how many indicators we have on a chart or on a system, you'd have lines everywhere. It would be bound to hit a level at some stage or another. So what we aim to do is to give you the important ones that we feel are relevant to your trading ability. And as we're not looking at traders going on 5-minute charts, we're actually looking for traders to strategically trade, and really you shouldn't go further down than a 4-hourly chart. You can check your monthly, just keep that in the back of your head. Weekly obviously gets checked every week, and your weekly pivot put on. You've got your monthly pivot put on already up there, and your daily pivot you just alter every day using the parameters I've given you. So with the S&P, it's come down. It's hit this today. It's hit the 38.2. Is there any other support around there? Well, you've got to go back some. You've got this over here. So you've got to go back in time as well. It's very important that you go back in time, because support becomes resistance, resistance becomes support. It's that sort of thing. So you've got to be aware of what the market's done over the past X amount of months, a year, whatever. You've got to be able to do that. And it will come to you eventually. You will just know these levels. You will just, they'll just be in your head. So that's our aim. That's what we hope to achieve. Is the market going to go up today? Well, there's a good chance it will do if it can hold on to that 5314 area, and there's a very good chance that it can go up and test the daily pivot. Markets love daily pivot points. I don't know why. 43 years ago they loved daily pivot points, and they still do. So I'm not here to question it. I just go along, I just go with the flow, just go with what I see. Now, I love the NASDAQ. I think that it can become if I squish this up, the NASDAQ sometimes, more than often, will become the first market to make a break. Now, if you think that's because of the technology, the tech stocks, you're absolutely right. It is because of the tech stocks. And then you'll see the S&P follow, and the Dow follow, obviously. So I haven't put any pivot points on this. I would really like you to start, doing your own pivot points. I think that'd be really good experience for you. As I said, I've given you the template for it. You just look it up on Google. There it is, and do them yourself. If you get stuck, obviously we are here to help, and I will be doing more on pivot points, obviously, as we go along. Now, with the NASDAQ, there is depth to this market. Don't think there isn't, because there's a lot of depth to the NASDAQ, and I think that's what makes it one of the leading stock markets, is because a lot of people trade it, and they trade it well. So what I would suggest is that even if you're not trading the NASDAQ, always keep your eye on it, just to see what it's doing. Is it making a pattern that the others aren't yet? Is it becoming more oversold than the others aren't yet? And if you can master those three, the S&P, the Dow, and the NASDAQ, that's fine. And strangely, Bitcoin follows the S&P and the US stock market. So if you're going to be a Bitcoin trader, you need to look, and you need to know where these levels are that the market is looking at. Otherwise, you're just hairy-fairying. So you need to know where these levels are. You need to know that Bitcoin and most of the crypto follow the S&P. So anybody that puts their "I'm a brilliant crypto trader" on Twitter, and look at me, follow me, and buy my signals, professional traders don't do that. We never put our P&L on Twitter. We never put our trades on Twitter. We don't have time to do that, and we're not selling you anything, because again, we don't have time to do that either. So all this is education only. It is to get you to a level for you to reach your full potential as a trader, if this is what you wish to be. And I thoroughly recommend it. I've been doing it for many, I was going to say years, but it's decades now. And it's one of those things that it grabs you. It either grabs you or it doesn't. And if it grabs you, you work at it. And I will not insult you by saying that you don't have to work at it. You do. You know, you do. I used to work from 5 in the morning till 10 at night. And Sundays when I used to do all my analysis, so I was good to go on a Monday. So it isn't a case of just coming in and it looks like it's going up or it looks like it's going down and flip a coin. You're gambling. We don't gamble. We take educated risks when we factor in all the information that the market provides. Okay, so when people say you're gambling, just politely tell them that you're not, and politely tell them that, it's an educated risk. So let's have a look at the Dow. And the Dow, I like the Dow. I know it's only like 30 stocks, but I quite like it. But then I like all US markets. You can see, we're above the 50% level here. Okay. So wait and see what it does when Wall Street opens. We're not open yet, so wait and see what happens. Put your pivot points on, look at your moving averages, look at your weekly chart. If it comes back, we're at neutral stochastics at the moment, which means the market's had a big move up, doesn't quite know what to do, so it's having a little breather. Take it as they're running up a hill, or in this case, running down a hill. And you will find there's a saying in trading, you go up by the stairs, down by the escalator, which is why traders love bear markets. And unfortunately, in a bull market, they're always trying to pick the top because they know that the market, when it turns, will absolutely make them all their money. However, you can get caught out because in a bull market, there are specific patterns and specific indicators that you need to look at, like volume, open interest, all sorts of things like that. That's a bit complicated to go in now, into now, but obviously we will cover all aspects of trading and what to look for when a market tops and bottoms, because they all do virtually exactly the same. So that's what I do. I think I've explained the US stock markets today as much as I possibly can, and just take a look. Good luck trading, and I'll catch you tomorrow. Bye.